All right, so are you ready to take a deep dive with us today?
Always ready to dive in.
We're going to be talking about flash loans,
Okay.
which are these really cool things where you can borrow
All
crypto
right.
and repay it within the same transaction block.
Yeah, it's kind of mind-blowing, isn't it?
It is kind of mind-blowing, so I'm excited to learn more.
Me too.
I know you had a chance to look at some of the materials that you sent me
Yes.
to get ready for this deep dive. So where should we start?
Well, I think we can start by talking about how to learn about flash loans.
Okay.
Because they can be kind of complicated.
Yeah, they are kind of a new thing.
So two of the resources you sent me were Eat the Blocks
Mm-hmm.
and DApp University.
Yeah, I've actually heard of Dapp University before.
They're great.
Yeah, they are.
And so I think they're a really good place to start.
So what's so great about them?
Well, they both have YouTube channels.
Oh, cool.
And they explain things in a really clear and easy to understand way.
Okay, so they break it down. Make it simple.
Yeah.
What are some of the videos that they have?
So DeP University has one that's called 3 Ways to Profit with Flash Loans in 2024.
Oh, wow. So they're getting really specific.
Yeah, and then Eat the Blocks has tutorials on how to build flash loan applications.
Oh.
So you can actually, get your hands dirty.
So it's not just theory, they're actually getting in.
Exactly.
Showing you how to do it.
Yeah.
That's awesome.
Mm-hmm.
So what are some things people should know before they get started with these?
I think the biggest thing is to understand what a smart contract is.
Okay, yeah.
And how they work.
That is a big
Because, flash loans are essentially smart contracts.
Right.
And then you also need to understand how decentralized exchanges work.
Yeah.
Because that's where a lot of the arbitrage opportunities come from.
So it's all connected.
It is.
Yeah. And the blockchain,
Right.
all this is built on top of that.
Exactly.
Okay, cool. So I think I'm getting a better understanding
Okay.
of how all the pieces fit together.
Yeah.
Blockchains,
Yeah.
smart contracts,
Yeah.
decentralized exchanges.
Right.
And then you can use these resources like
Exactly.
Eat the Blocks and Dapp University
Yes.
to kind of put it all together.
Mm-hmm.
So what can people actually do with flash loans
That's a great question.
once they
Got it.
kind of have that foundation?
So one of the most popular things to do is arbitrage.
Okay, I've heard of that. What is it?
So arbitrage is basically taking advantage of price differences between different exchanges.
So you're buying low
Right.
and selling high,
Exactly.
but you're doing it all really fast.
Yeah. And that's where the flash loan comes in.
Okay.
Because you need to be able to borrow a lot of money very quickly.
To take advantage of those price differences.
Exactly. Yeah. It's pretty cool.
That is really cool.
And then another popular thing to do with flash loans is leveraged yield farming.
Okay, so yield farming I know is like earning interest on your crypto.
Right.
But what's leveraged yield farming?
So leveraged yield farming is basically using a flash loan to increase the amount of crypto that you're lending out.
So you're getting
So
getting more interest
more big interest.
because you have more crypto.
Yeah, exactly.
Wow, that's amazing.
It's a really powerful strategy.
But I'm guessing there are risks involved.
There are definite risks involved.
Yeah.
And I think that's something we should talk about next.
All right, so let's take a deep breath
Oh,
and dive into the dark side of flash loans.
sounds good. So the dark side of flash loans.
Yeah, what makes these things potentially risky?
Well, one of the biggest risks is smart contract vulnerabilities.
Okay, so if there's a problem with the code,
Exactly.
that could be bad.
Yeah, like a hacker could exploit that vulnerability and drain funds from the contract.
Oh, so it's not just that the strategy might not work.
Right.
It's that someone could actually steal your money.
Exactly. That's why it's so important to have your smart contracts audited by experts.
See, you need to make sure that the code is really solid.
Yes, definitely.
Okay, what else?
Another risk is oracle manipulation.
What is that?
So oracles are basically data feeds that provide information to smart contracts.
Okay, like price information.
Yeah, exactly. So if an attacker can manipulate an oracle, they can trick the smart contract into doing something that it's not supposed to do.
So it's like feeding bad information to the contract.
Right. And that can lead to all sorts of problems.
So how do you protect yourself from that?
Well, one way is to use multiple oracles.
So you're not just relying on one source of information.
Exactly. And you also want to make sure that you're using reputable oracles.
Okay, so ones that have a good track record.
Yeah. And there are also ways to build safeguards into your smart contracts to mitigate the risk of oracle manipulation.
So you're kind of anticipating that something could go wrong.
Right. You're trying to make your contract as resilient as possible.
So it sounds like security is a really big deal with flash loans.
It is absolutely essential.
What are some resources that people can use to learn more about security?
Well, there are a few websites that I would recommend. One is Blockchain Threat Intelligence.
Okay, I've heard of them.
They provide in-depth analysis of different vulnerabilities and attack vectors.
So you can kind of see what the hackers are up to?
Exactly. And then another good resource is Solidity Scan.
What is that?
It's a security scanner that's specifically designed for Solidity, which is the programming language used for most smart contracts.
So you can actually run your code through it.
Yes, and it will flag any potential vulnerabilities.
That's really helpful.
Yeah, it can save you a lot of headaches down the road.
So we've got these YouTube channels for learning the basics.
Mm-hmm.
We've got the sandbox environments for testing our strategies.
Right.
And now we've got these security resources for making sure that everything is safe and sound.
Exactly.
It's like we're building this whole ecosystem around flash loans
It is kind of like that.
to make sure that we're using them responsibly.
Yes, definitely.
So what's the biggest takeaway for our listeners today?
I think the biggest takeaway is that flash loans are a really powerful tool, but they're not for everyone.
You really need to know what you're doing.
Exactly. If you're not careful, you could lose a lot of money.
So do your research.
Yes, absolutely.
Test your strategies and be aware of the risks.
Right. And don't be afraid to ask for help.
There's a whole community out there that's willing to share their knowledge.
Yeah.
Awesome.
It's an exciting space to be in.
It is really exciting.
And I think we're just scratching the surface of what's possible with flash loans.
I agree. So what's next?
Well, I think the next step is to start exploring some of the more advanced use cases for flash loans.
Like what?
Like building decentralized applications that use flash loans to provide new and innovative financial services.
So we're not just talking about arbitrage and yield farming anymore.
Right, we're talking about things like decentralized lending platforms and insurance protocols.
That sounds amazing.
There's so much potential here.
I can't wait to see what the future holds for flash loans.
Me too.
Well, I think that's a great place to wrap things up for today.
Okay.
Thanks for joining us on this deep dive into the world of flash loans.
My pleasure.
And we'll see you next time.
Yeah, so much potential.
So to wrap things up, I mean, we've learned a lot
Yeah.
about flash loans today.
Yeah.
I guess if you could just give one piece of advice
Okay.
to our listeners, what would it be?
I would say just be careful.
Okay.
Do your research.
Yeah.
Understand the risks before you jump in.
This isn't something to just like
Right.
throw money at
No, you really need to.
and hope for the best.
Understand what you're doing.
Yeah.
Yeah.
So start with those YouTube channels.
Yeah, those are great resources.
Depp University,
Mm-hmm.
Eat the Blocks.
Yeah. And then there are a lot of other great resources out there too.
Yeah. And test things out
Yes,
in
definitely.
a sandbox environment.
Don't use real money until you're comfortable.
Exactly.
Yeah.
Awesome. Well, this has been a really fascinating deep dive.
It has.
I've learned a lot. I hope our listeners have too.
Me too.
And I think this is just the beginning
I agree.
of the flash loan revolution.
Yeah. It's going to be interesting to see what happens in the next few years.
Absolutely. So thanks again for joining us.
My pleasure.
And we'll see you next time for another deep dive. All right, let's dive into flash loans and smart contracts. Specifically, how they work together in crypto arbitrage. We've got some research here, YouTube, blogs, even a scam analysis.
Yeah, it really is fascinating, like flash loans and smart contracts, how they work together. It's almost like a high stakes dance. Yeah, totally choreographed by code.
So unpack that a little bit for listeners who might be new to all of this. Can you explain how a smart contract actually works, like in the context of a flash loan?
Okay, so imagine like a digital agreement.
Yeah.
But it executes, automatically executes its terms. That's basically a smart contract. And with a flash loan, the smart contract is facilitating, borrowing cryptocurrency, and often like a huge amount with zero money down.
Zero money down. I mean, come on, what's the catch?
Well, there is a catch.
Right.
You have to repay that loan within the same transaction block. If you don't, the whole transaction, it's reversed.
Right.
Like it never even happened. And this is all controlled by the smart contract. So it eliminates the risk for the lender.
So it's a trustless system. I mean, the code just guarantees everything happens the way it's supposed to.
Yeah, exactly. And it's this trustless nature that really opens up all these opportunities for arbitrage because you see, smart contracts, they enable these loans, right? These lightning fast loans.
Yeah.
That allow you to exploit price differences, between different exchangers.
Yeah, because speed is everything, right? In arbitrage.
Yeah.
You need to buy low on one exchange and sell high on another.
Yeah.
Before that price changes. But hold on. What exactly is a flash loan? Like, how can you borrow potentially a huge sum of money for free? I mean, that's kind of mind-boggling.
Yeah, no, it's a pretty radical concept. A flash loan essentially allows you to borrow a large amount of crypto for free. and without putting up any collateral. Like it's like a super short-term loan, all executed within a single transaction block on the blockchain.
So it's like borrowing $1 million to buy, a rare comic book at a discount and then selling it for a profit
Yeah.
and paying back the loan all in like the blink of an eye.
Yeah, that's a great analogy, and because it all happens, in a single transaction, it's incredibly fast, it's incredibly efficient, but that also makes it incredibly risky.
Yeah, for sure. I mean, if the price of the price of the comic book drops before you can sell it, you're in trouble. And speaking of risks, that scam analysis,
Yeah.
it's a good reminder that this isn't all, sunshine and rainbows.
Oh yeah, absolutely. That particular scam really just shows you how important it is to really understand the code behind a smart contract before you interact with it.
Yeah, so knowledge is power. You really need to be able to spot those red flags,
Right.
And just avoid falling prey to these scams.
Exactly. And even if a smart contract is, legitimate, there are still market risks to consider. Prices can fluctuate, rapidly, and if you don't execute those trades perfectly, you could lose money.
Okay, so we've established flash loans and smart contracts. They're powerful tools, definitely high stakes.
Yeah.
So let's dive into some specific examples of how they're being used, for arbitrage. I've heard a lot about, arbitrage trading bots. What can you tell us about those?
Yeah, arbitrage trading bots they're essentially automated programs, and they
Right.
constantly scan different cryptocurrency exchanges, right? They're looking for price discrepancies, and when they find one, they can execute a flash loan, buy the cheaper asset, sell it on the more expensive exchange, and repay the loan all within milliseconds.
So it's like having a tireless digital assistant working 24/7 to find you the best arbitrage opportunities.
Exactly. They take the emotion out and the human error out of the equation. But of course, they're only as good as the code, that drives them. And that kind of brings up a crucial point, right? Understanding the limitations of even the most sophisticated bots. Like they can't predict those sudden market shifts or account for every variable.
Right, which is why, human oversight is still so important. You need to be able to monitor that bot's activity and intervene if necessary.
Exactly. And even with the best bot, the sharpest eye, there are inherent risks in flash loan arbitrage, transaction fees, gas fees.
Yeah.
They can eat into your profits, and you're always racing against time and price volatility.
Yeah, it sounds like a constant balancing act, weighing, potential profits against potential losses. So what are some of the strategies that people use to kind of manage these risks?
Well, one common strategy is to focus on stable coins, because they're pegged to a stable asset like the US dollar.
Hmm.
They're less susceptible to those wild price swings.
Right, that makes sense. Less volatility, less risk, but it also probably means smaller profit margins, right?
Yeah, that's the trade-off. You're
Yeah.
sacrificing potential gains
Yeah.
for greater stability. Another strategy is to diversify across multiple exchanges. This spreads out your risk, right, and increases your chances of finding those profitable arbitrage opportunities.
So don't put all your eggs in one basket. That's
Mhm.
that's wise advice for any investment strategy, really. But let's shift gears for a second. We've talked a lot about arbitrage, but there are other ways to use flash loans, right? Like leveraged yield farming, which you mentioned earlier. Can you kind of break that down for us?
Sure. Leverage yield farming is basically using borrowed money, in this case a flash loan, to amplify your returns from lending platforms. It's kind of like taking out a loan to invest in a high interest savings account.
So you're essentially borrowing money to make more money.
Mm-hmm.
Sounds risky, but potentially very lucrative.
It can be. Let's say you deposit, $100 of your own money into a lending platform that offers like a 10% annual interest rate. Well, with a flash loan, you could borrow like $900 more, giving you a total of $1,000 to invest.
So you're earning interest on $1,000, even though you only invested $100 of your own money. That's a 10x multiplier on your returns.
Yeah, exactly. But keep in mind that flash loan needs to be repaid within the same transaction block. So you're essentially taking out a high interest, ultra short term loan.
I'm starting to see how these flash loans can like supercharge your returns.
Mm-hmm.
But it's also clear that the risks are definitely magnified.
Absolutely. If the value of your collateral, drops below a certain threshold, which can happen quickly in the crypto world, you risk liquidation.
Meaning the lending platform just automatically sells your collateral to cover their losses. Ouch. That's a good incentive to understand the risks before jumping into leveraged yield farming.
It is, and it's why platforms like Aave, DYDX, and Balancer, which are popular for flash loans, have built-in safeguards
Yeah.
to help mitigate those risks.
Speaking of those platforms, you mentioned earlier that they each have unique features and risks. Can you elaborate on that? I'm sure our listeners are curious about which platforms are best suited for different strategies.
Certainly. Aave, for example, is known for its wide range of supported assets and its flash loan functionality that allows for more complex multi-step transactions. It's a popular choice for experienced DeFi users who are, comfortable navigating those complex smart contracts.
So not exactly for beginners then.
Probably not. DYDX, on the other hand, is more focused on margin trading and derivatives. It offers flash loans, but they're primarily used to facilitate those leveraged trading positions.
Interesting. So DYDX is more geared towards traders who are comfortable with higher risk
Yeah.
and potentially higher rewards.
Exactly. And then there's Balancer,
Hmm.
which is known for its user-friendly interface and its focus on automated portfolio management. It offers flash loans, but they're integrated into its larger ecosystem
Yeah.
of liquidity pools and automated trading strategies.
It sounds like each platform kind of caters to a different type of user and offers a different set of tools and risks. It's like choosing the right tool for the job. But let's not forget about that scam analysis. It's a stark reminder that not all platforms are created equal.
That's right. It's crucial to do your due diligence before interacting with any platform or smart contract. Look for reputable platforms with a proven track record and a transparent development process.
And if something sounds too good to be true, it probably is.
Wise words. There are no shortcuts in the world of flash loans. Knowledge, caution, and a healthy dose of skepticism are your best allies.
Well said. We've covered a lot of ground today, from the mechanics of flash loans to their applications in arbitrage and leveraged yield farming. But we've also touched on the inherent risks and the importance of due diligence. It's clear that flash loans are a powerful tool, but they're not for the faint of heart.
And they're still a relatively new technology. As they continue to evolve, we're likely to see even more innovative applications emerge. But with innovation comes risk, and it's important to stay informed and approach this space with both curiosity and caution.
It's amazing to think that all this we've been talking about, flash loans, smart contracts, DeFi, that it's all built on blockchain technology. It's like we've created like a whole new financial system operating completely independently of traditional banks, and institutions.
Yeah, it really is remarkable. And honestly, it's just the tip of the iceberg. We're really just starting to explore the potential of this technology. And one of the most exciting areas, I think, is using flash loans for social good.
Social good. I don't usually hear that phrase associated with like high frequency trading and arbitrage. How can something that's seemingly so focused on profit be used for social impact?
Well, think about the inherent efficiency of flash loans.
Right.
The ability to access and utilize huge amounts of capital, but only for a very short period. Now imagine applying that efficiency to address like real world problems.
Okay, I'm intrigued. Give me an example.
Okay, let's say there's a natural disaster,
Right.
like a hurricane or an earthquake, and a community needs immediate access to funds for relief efforts. A smart contract could be, set up to trigger a flash loan when certain conditions are met. In this case, like a verified disaster declaration.
So the funds are just instantly available, like without having to go through the whole lengthy process of traditional fundraising, right?
Yeah.
And aid distribution.
Exactly. The flash loan could be used to purchase, essential supplies, provide temporary housing, or even fund like micro loans to help people rebuild.
Yeah.
Rebuild their lives.
That's incredible. It's like a humanitarian aid rapid response system.
Yeah.
Powered by blockchain.
Yeah. And it's not just disaster relief. Flash loans could be used to fund renewable energy projects, support sustainable agriculture initiatives, or or even provide access to microfinance, in developing countries.
Wow. So it's like taking the speed and the efficiency of the financial world and applying it to the challenges of the real world. I'm starting to see the bigger picture now.
Yeah, the potential is truly limitless, and as more developers and more entrepreneurs, start exploring these applications, I think we're going to see some really, really groundbreaking solutions.
This is mind-blowing. We've gone from using flash loans to make a quick buck, you know, on arbitrage
Yeah.
to potentially solving some of the world's most pressing problems. It's like a whole new paradigm of possibility
Yeah.
has opened up.
Yeah, and it all comes back to the power of smart contracts. They're the invisible force behind all of this.
Yeah.
Orchestrating these complex transactions, making sure that everything happens as it should.
So it's not just about the technology itself, but how we choose to use it. We have a responsibility to explore both the profit-driven applications and the socially impactful applications of flash loans.
I completely agree. The future of finance and really the future of the world is being shaped right now, and it's up to us to decide, what that future will look like.
Well, on that note, I think it's time to wrap up this episode. We've covered a lot of ground. I mean, from the technical details, of flash loans and smart contracts, to their potential impact on the world. Hopefully, we've given you a better understanding of this complex and rapidly evolving space.
And remember, the learning never stops. Stay curious, stay informed, and keep exploring this fascinating world of blockchain technology.
That's the perfect way to end our deep dive. Thanks for joining us, and as always, keep your mind sharp and your wallet secure. there's got to be some serious risk involved, right? Like, but got to ask,